Bell Direct joining us as well. Julia, your thoughts on trade today? Pretty nice gains, pretty low volumes, I guess.
Katie, it was a slow day, but a good day. Less than $2.5 billion worth of stock going through, so not surprising given that we are seeing a couple of states on public holiday, but a really good day, up almost 2%. And in fact, just having a look across the market, every sector trading higher. And in the top 200, only 4 stocks actually trading lower. So the material space was a clear standout, up by 3.5%. The energy space up by 2.9%. One of the things impacting on the market was the fact that we did see such a stunning performance and a turnaround on the US market on Friday. Those job numbers out of the US were disappointing, but given that's encouraged the market's view that we're going to see rates in the US lower for longer, that's been good news for risk assets. So commodity prices doing well. Oil prices were up by 1.8%, and we also saw copper prices up by 1%. And that's part of the Glencore story. The massive tumble that we've seen in commodity prices means that the world's largest commodity trader has been under pressure, and a lot of worry around what that means for Glencore's investment grade, and also if it does drop an investment grade and it does get into trouble, what that means in terms of counterparty risk. And a lot of people were calling it the Lehman's moment of the commodities space. So the fact that we are seeing Glencore trying to get its balance sheet in order, a huge positive in terms of market stability, and especially for those commodity-based stocks. This week's going to be a big week outside of that. We do see the RBA meeting tomorrow. Rates are expected to remain on hold. But we also see the Bank of Japan on Wednesday, where policy is expected to remain unchanged. And then the Bank of England on Thursday as well. So altogether, a pretty big week. But today, a slow day, but an excellent one for the market.
Yeah, sure was. For the month of October.
Well, Kate, the last couple of years, what we have seen is a spike in volatility in August and September, and that's eased off into October, which has meant better returns for the market. So if we have a look at last year, we saw in October volatility down by 17% for the Australian share market, and hence the Australian market rallied 4.4%. And in the previous year, in 2013, volatility was actually down by 19%, and the market rallied 4%. Now, in terms of what might go against us this year, we know that the number one concern for most traders is global growth at the moment. So what's happening in terms of the US and in terms of China is very important, and a feeling that we have seen in the US earnings peaking, and that we're now seeing the earnings cycle turning downwards. So that would be a negative in terms of the US market. Having said that, the Australian market did start this correction, so it has been a leading indicator. So we'll probably come out of it before the US. And having a look at the Australian market in this new quarter, this is the quarter where we do see dividends being paid. So it is going to be a record dividend paying season. More than $20 billion worth of dividends will hit bank accounts, and some of that money will also find its way to the markets. So I know that the markets are concerned around global growth, but I think this is going to be more end of 2016, 2017 story, and I'm hoping for a Santa rally into year end, as we have seen in the last couple of years.
It's a funny,
as always.
Probably a good idea.
Julia, let's talk a bit about the gold price. We saw some nice gains there overnight, or at least since Friday in the United States and in Europe, about 1% in terms of the pop.
We did see gold stocks doing well, and in fact gold stocks have been doing well all throughout this year. The gold subsector is up a massive 32% in 2015,
wow.
And that's compared to the market, which has actually lost ground. Now, a lot of that so far has been the Aussie dollar, which has depreciated against the US currency. It's down 13% in the year to date, and that means that the gold miners with mines producing in Australia are still making some pretty attractive margins, despite the gold price in New York being down by 4% over the year to date. We have seen gold miners doing very well today on the market, and that's because we saw gold prices in New York up by 2% and silver prices up by 5% on Friday. That was on the back of expectations that we will see the Federal Reserve raising interest rates later than expected, so lower for longer over in the US, and that means there's not going to be a carry cost really for gold prices for a longer period of time. So we saw new yearly highs being made for stocks like Northern Star, Evolution Mining, as well as Ramelius. Newcrest was up 9% today, Evolution was up 7.5%, and OceanaGold was also up by 7.5%. So some good performances there by gold. The only exception was Kingsgate, that was down around about 8%. And that was on news that it looks like their float over in Thailand may not get away. So just watching Kingsgate closely, but otherwise gold has been a good story. Just on that October effect, it isn't actually the last 2 years. If you go back the last 10 years, October's surprisingly been one of the best performing months of the year, and that's despite things like the 1987 stock market crash, the market peaking on the 1st of November back in 2007 as well. So altogether, it does look like perhaps there's a dividend effect that comes in when you do see these dividends hitting the mark in some of these dividend reinvestment plans. So although I've quoted the last 2 years, I have crunched the numbers over the last couple of decades as well.
Juliet, let's talk a bit about Vida as well. This company in a trading halt at the moment. What are we expecting to hear here?
Well, Vida is one of these companies that has a nice economic moat. It's one of these businesses that would be difficult to start up again. It's a credit ratings agency. It's the largest that we have here in Australia. They have data on about 20 million people. And one of the world's largest credit companies, which is listed in New York, Equifax, we know has an offer at $2.70 on the table. Now, it does look like the stock's in a trading halt, and the market's expecting to see an increase of this offer to around about $2.90. So that would be great news for Vida shareholders. The company only floated on the market back in 2013, and that was at $1.25, and they have had dividends over the last couple of years. So Vida shareholders, if they got in on the initial public offering, they're looking at a gain of 140%, including dividends over the past couple of years. So that would be a good story. It is a stock that we're watching. The current offer is at $2.70, but we're expecting it to be increased to about $2.90.
Julia Lee from Bell Direct.